Hello and a warm good morning. You're tuned into Market Cafe. I'm Ankita Saxena. With me is Nupur Talwarsuri, and in the next half an hour, we'll take you through all of the transpired on the global front, whether it's the markets, the geopolitics, and the cues back home you need to watch out for before the start of D Street. So without further ado, let's get going with how the Wall Street shaped up yesterday. Well, we did see a rally come in as far as the tech names are concerned. Now remember it, in the earnings call for SpaceX, Elon Musk said that it will be using Nvidia chips exclusively for the AI infrastructure, and on the back of that, Nvidia rallied yesterday. That was up in a way 3%. That was buoying the sentiment as far as Dow Jones is concerned. In fact, Dow, if you look at the Dow Jones industrial average, that shut shop 263 points up, 0.5% gain coming in. Though we did see a cool-off come in, we did see profit-taking coming in the later hours on the tech names. We had Nasdaq that was down and out 0.8% on account of profit booking. And of course, we had S&P 500 that was absolutely flat with cuts of just 12 odd points. So we do see the earnings that are really strong as far as Wall Street is concerned. So the earnings is really buoying the sentiment there. But the tech stocks are also seeing a bit of a cool-off coming on the back of some profit taking, and on the back of that, semiconductor stocks still remain under pressure, though Nvidia was perked up in trade with gains of almost 3% yesterday. So that's how really the Wall Street shaped up. But let's also talk about the commodities and the Asian markets, Nupur.
Absolutely, Ankita. And even as there is talk of the fact that the US-Iran deal could finally be on the anvil, Brent seems to have gone above the $80 a barrel mark at this point in time. Now, this even as the war drags on. Now, things, of course, could be looking up soon, because we've heard that the US and Iran and Oman are actually negotiating an interim deal in which inbound ships would transit Iran's territorial waters, while outbound ships would sail through Oman's waters in coordination with Tehran. But of course, that's something that we'll have to watch out for through the day today. Gold, of course, remains at above $4,276 an ounce. Let's also turn our attention now to the Asian equity markets. They mostly declined in the morning. They're, of course, tracking weak leads that are coming in from Wall Street, as technology stocks seem to be under pressure. Now, what we are seeing, of course, is that Japan's Nikkei and South Korea's Kospi, both indices are leading the region lower, weighed down by losses in major chip and AI-related shares. But of course, those are things that we will be tracking on through the day as well.
All right, so that's how the Asian market is shaping up. Even the implied start of Nifty is indicating a very muted start of just 36 odd points in the green. But let's talk about the geopolitical front, the diplomatic push around the Strait of Hormuz that appears to be gathering pace. US President Donald Trump says talks with Iran are underway and claims a deal could be reached as early as today or Thursday. However, Tehran continues to deny any direct negotiations with Washington. Instead, Iran and Oman say they are in the final stages of drafting an agreement on the commercial shipping through the Strait of Hormuz, while warning that the progress depends on the outside powers not disrupting the process. Let's listen in.
Republic of Iran, we're knocking the hell out of them. Knocking the hell out of them. I'd rather make a deal, because I don't want to kill people. I do not want to kill people. But at some point we were set for the biggest attack of any attack, and we've hit them very hard for the last few months. But we were all set for the biggest attack since World War II. And they called me and they said, please don't do it, let's talk. And then they said, we never said that. You know what? The fake news knows they did say that, but we are talking. Let's see what happens. But they respect us. They respect us. It's been 47 years, but really it's been 50 years, because they've been saying 47 for 3 years. It's been 50 years. And no other president has done what you should have done a long time ago, because Iran cannot have a nuclear weapon. Can't have it.
Well, we're hoping, of course, that deal does finally come through. Now, the U.S. Federal Reserve is turning increasingly hawkish. Fed Governor Lisa Cook says that she is prepared to support a rate hike if inflation does not continue to ease, warning that 5 years of above-target inflation risks becoming entrenched. Now, at the same time, Minneapolis Fed President Neil Kashkari says that now is the time to begin raising rates gradually rather than waiting for inflation to worsen. Now, the comments have strengthened expectations that the Fed could consider a hike as early as September or October.
And the Trump administration has refunded nearly $100 billion to importers after the U.S. Supreme Court struck down the 2025 Liberation Day tariffs imposed under the emergency powers. That's about 60% of the roughly $166 billion collected under the now invalidated tariff regime. Even as refunds are being processed, Trump says his administration is reimposing similar tariffs using other legal authorities.
All right, now let's turn our attention back home. And the monsoon deficit has narrowed further, with India now recording an 11% rainfall shortfall as on the 5th of August, according to the IMD. Now, the Weather Office has forecast heavy to very heavy rainfall across several states over the next few days. And Akansha is joining in with a rain check. Morning, Akansha. So tell us what we're expecting.
That's right. Monsoon activity continues across several parts of the country, with India Meteorological Department issuing fresh forecasts for multiple states. The IMD has issued isolated heavy to very heavy rainfall forecast for Kerala and Karnataka over the next 4 days. Meanwhile, heavy to very heavy rainfall has been forecast over West Bengal, Konkan and Goa, Madhya Maharashtra, Odisha and Uttarakhand as well. The Weather Office has also predicted heavy rainfall over Assam and Meghalaya, Bihar, Chhattisgarh, Himachal Pradesh, Jharkhand, Madhya Pradesh, Rajasthan, Sikkim, Tamil Nadu, Uttar Pradesh and Karnataka. Now turning to Mumbai, the city's 7 reservoirs continue to remain at comfortable water levels. As of 5th of August, the 7 reservoirs are at 88.93% of their total life storage capacity, which is slightly lower than 89.54% of which was recorded a day prior. Now let's take a look at the latest monsoon deficit numbers released by IMD as of August 5. East and Northeast India reported a 26.9% rainfall deficit, while Northwest India recorded an 11.5% deficit. Central India continues to remain in surplus with rainfall 2% above normal, while the South Peninsula remains 18.1% below normal. Now, the cumulative rainfall deficit of India now stands at 11%, which indicates a gradual improvement in country's monsoon season.
And well, let's talk about the earnings season then. It was a weak quarter earnings for Power Grid as revenue, PAT and EBITDA missed the street estimates. Sunidhi is now joining us with the highlights.
Power Grid posted a weak Q1 for FY27. All its numbers across the board from revenue to PAT came below the street's estimates. Talking about the financial performance, while its revenue grew only about 3% YOY, its EBITDA grew only about 4% YOY, while PAT came down by 1%. Talking about the segment revenue, its core transmission business remained stable rather than strong during the quarter. While the transmission revenue grew only by 2% YOY, its consultancy revenue grew by 28%, while telecom actually declined by 13%. However, the company's board actually approved investment for Power Grid. Power Grid now will invest around 856 crores for the reconductoring of the Tirunelveli, Udumalpet and Pugalur Madurai 400 kV double circuit transmission lines using the HTLS conductors technology. This project is said to be booked under additional capital expenditure and is targeted for commissioning within 24 months, approximately by 11th February 2028. However, we still have to look forward to the earnings call scheduled for August 7, 11 a.m., during which a few of the key monitorables will be any guidance on capex, capital allocation, asset capitalization, and any growth outlooks.
All right, thank you for that one, Sunidhi. Now, Neuland Laboratories has delivered strong earnings, beating in the first quarter with robust revenue growth and sharp margin expansion. Now, management remains optimistic on the growth pipeline with higher commercial volumes. And Meryl is joining us with more on this. Morning, Meryl. So what are we looking at here?
That's right. Neuland Labs has reported quite a phenomenal set of first quarter numbers. We've seen revenues more than double on a year-on-year basis EBITDA has surged six-fold, and EBITDA margins as well has expanded up to 35% from just 12% in the previous corresponding quarter. The biggest growth driver for the company was its CMS or contract manufacturing services business, where commercial molecules have contributed to the bulk of the company's top line. We've also seen management highlighting a strong increase in new project wins, with execution expected over FY27 and 28. The management commentary was equally encouraging. They reiterated that FY27 will be a year of growth for the company, with around 20% growth expected to be clocked in FY27 and 28. Despite reporting an exceptional 35% of EBITDA this quarter, management has maintained that their long-term EBITDA margin does remain at 25%, with anything above that flagged as only a bonus, saying and that anything above that should not be treated as normal for the company as well. They've also indicated that future capex will increase meaningfully, and it will be qualitatively different from what the company is currently doing, and this could temporarily weigh on return ratios. Management was clear that operating margins will stay intact. Overall, the combination in Neuland Labs we're seeing is that of a strong execution, a robust order pipeline, as well as a better mix of overall products, which is only increasing its contribution to its specialty portfolio, thereby increasing the company's overall margins as well.
All right, let's move on and talk about PB Fintech that reported a mixed first quarter, with revenue broadly in line with the estimates, with EBITDA and margins missing the expectations. Management remains optimistic on profitability, backed by revenues, AI-led efficiencies and expansion in the newer businesses. Mithali is now joining us with the highlights for PB Fintech.
Right, so for quarter 1 FY27, PB Fintech has declared a mixed set of numbers with the revenue and profitability ahead of the street estimates, but the margins as well as the EBITDA that has come in slightly below what the streets were penciling in. If you talk about the revenue, it has risen nearly 40% on a yearly basis, driven by strong growth in its core online insurance premium business and the new initiatives, while the net profit was up 92% ahead of the estimates, reflecting healthy operating leverage for the company. The EBITDA has nearly quadrupled to 139 odd crore rupees, while their margins they improved to 7% from the earlier of 2.5%, although both missed the consensus estimates. The insurance business that remained the key growth engine for the company, core online insurance premium grew by 41% for this quarter, while the new protection products, including the health and term insurance, they have surged nearly 53 odd percentage. Renewal revenue also remained a strong contributor, rising 38% on a yearly basis. Paisa Bazaar that continued to gain momentum, with credit revenue up 25% and loan disbursals rising nearly 33%. The company's new business that also continued to scale, with revenue growing 35% and profitability improving further ahead. And UAE business that also remained quite profitable in this quarter. Looking ahead, management remains optimistic, backed by investments in their AI expansions into the tier 2 as well as the tier 3 markets and continued focus on their protection business. The company is targeting the break-even for their PB Health by March 2027 and also plans to launch new saving products, including the bonds later this month. Back to you.
All right. Let's go back to Sunidhi now. And Sunidhi, we're talking about Cummins here. It appears to have been a weak quarter for Cummins India, as margins have compressed both year on year and sequentially. Now, the company focuses on steady business despite ongoing supply chain challenges. So tell us more about this one, Sunidhi.
That's right. So Cummins India reported a weak quarter 1 for FY27, with margin compression across the board, both YOY and sequentially. So while revenue numbers beat the street estimates, EBITDA was a miss, while PAT came in line. Quantitatively speaking, revenue was up 18% YOY, EBITDA was down 1%, while EBITDA margins came down from 21% earlier to 18% now. So the company's reported press release stated that the strong domestic demand and execution drove the revenue growth for the company this quarter, while margins were impacted by higher commodity costs amid the geopolitical disruptions. The company is focused on cost control, operational efficiency, and customer reliability. However, the management is certainly positive about the future, as they expect steady business momentum despite inflation and supply chain challenges, and they continue to prioritize disciplined execution, prudent capital allocation, and leveraging its strong balance sheet going forward, along with expanding the distribution network. Over to you.
All right, thank you so much for joining us with that. But also, let's talk about the other names that will be in focus. And for that, my colleague Darshita is now joining us with the stocks and news. Over to you, Darshita.
Right, let's take a look at the stocks which could buzz in trade today on the back of earning movers. Now, starting off first with Navin Fluorine, it delivered another impressive quarter, making its 7th consecutive quarter of revenue and profit growth. Revenue, EBITDA and profit all beat the street estimates, and the strong performance came from high-performance products, specialty chemicals and the CDMO business. While the management remains optimistic with the 3 molecules which is expected to reach FDA readouts over the next 8 to 12 months. Now, on the other hand, Godrej Agrovet reported a weak quarter. While the revenue grew, margins came under pressure, leading to a decline in both EBITDA and the net profit, with earnings missing the street estimates. GNFC has also posted a good sequential performance driven by better product utilization despite the lower volumes. Moving on, Cohance Life Sciences was the biggest disappointment, reporting a loss of against a profit last year, with revenue declining sharply. Next up, we have the positive thing, which is SIS reported strong growth across revenue, EBITDA and profit, beating the street estimates, and has also announced a buyback. And finally, talking about JK Lakshmi Cement, which has posted better than expected revenue and profit. Although the margins remained under pressure, the earning beat is likely to keep the sentiment positive in today's trade.
Right, let's now go across to Ashesha. I think, Ashesha, good morning. What's on your list?
Well, yes, so a couple of stocks that will be in focus on the back of numbers, and a couple of other than numbers as well. And let's start with that list first, and let's talk about United Spirits. And there's a negative news piece over here because FSSAI has now issued an order regarding sale of certain whiskey products that are manufactured at the company's third-party facility, citing non-compliance of product labels under the Food and Safety Standards. So FSSAI has issued a notice to United Spirits, which is why we could see some bit of negative development on this counter. Waaree Renewable Tech, meanwhile, will also be in focus, and the company has informed the exchanges that they have secured an EPC contract from Solaris Horizon Energy. This is to develop 210 MWP grid-connected ground-mounted solar project. So that's an order win that has come in for the company, which is why Waaree Renewable Tech will also be in focus. Let's also put the spotlight on Sterlite Technologies, and again it is on the back of an order win. The company has secured a 3-year international supply agreement with a leading telecom infrastructure company, and this is for supply of high-density optical fiber cables with an approximate value of about $210 million. So an order win is why Sterlite Technologies will be in focus today. Neuland Pharma, meanwhile, has entered into an agreement with Neuland Laboratories. This is a strategic long-term CDMO partnership to manufacture sterile APIs for microparticle depot projects. So some new developments that have come in because of which this pharma company will be in focus. Lastly, a positive development that has come in for Giant Resource Recycling, where the prohibition order on the company's Unit 2 manufacturing facility has now been revoked, which means that the company will now be able to manufacture at its plant in Chennai. So positive development that has come in for Giant Resource Recycling.
All right, let's move on and talk about Aurobindo Pharma as well, that has posted an inline first quarter performance with double-digit growth in revenue and profit. Meryl is now joining us with the fine print for Aurobindo. All right, Snehi is now joining us with the fine print for Aurobindo Pharma. Let's take a look.
Yes, well, let's take a look at Aurobindo Pharma's Q1 earnings, largely inline set of numbers. The revenue has come in at 9,150 crore rupees, which is an uptick of almost 16.5%, in line with estimates. EBITDA too in line with our estimates, with an uptick of about 17.3%. The net profit has come in at 986 crore rupees, which is down 29% on a year-on-year basis, a miss versus what the street was estimating. Remember, this is the reported PAT. If I take a look at the adjusted PAT, there is a one-time expense that the company has incurred on account of restructuring costs of 40 crores. So if I add that back to the PAT has come in at 1,026 crores. This is the adjusted PAT, which is in line with our estimates. And lastly, margins also at 20.6% have seen a nominal improvement of about 20 bips. So looking good on that front as well, and absolutely in line. The other announcement that the company has released along with its earnings is Eugia Pharma Specialties, which is the company's injectables business, has now been merged with the company. Since Aurobindo owned 100% equity in this company already, this is just a streamlining of operations and will not affect shareholders. Now shifting focus as to what the management commentary has been, they've said that they've started FY27 on a strong note with healthy growth across businesses. Growth has been driven by execution and diversified product portfolio, and they're confident of achieving their growth targets despite global environment. Now let's talk about the business performance. Formulations revenue was up 16.5%, API revenue up 14.5%. The beta-lactam and non-beta-lactam business also has shown growth, but the non-beta-lactam business is down 10.5% on a year-on-year basis. US formulations was up 8.1%, driven by volume growth on new launches. Europe formulations up 25.5%. Growth markets revenue was up about 38%. The APV business, ARV, is also up at 330 crore rupees, and the API business revenue is up 14.6%. Lastly, what really stands out in this earnings is the cash balance that the company has. They've generated free cash flow of $98 million in Q1 and maintained a net cash positive amount of $42 million after the Lannett acquisition and the 85 million share buyback. So all in all, inline set of numbers from Aurobindo for Q1.
All right, Snehi, thank you for that one. Now, let's shift focus and look at Hindalco. Now, Hindalco will be in focus after the subsidiary Novelis reported a strong first quarter with adjusted EBITDA coming in ahead of street estimates. Now, while net debt remains elevated, brokerages remain constructive on Hindalco, and Ashisha is back with us on this one. So, Ashisha, tell us a bit more on this.
Well, yes, Hindalco will be in focus because Novelis, which is its wholly owned subsidiary, has reported better than expected set of numbers across all parameters. Adjusted EBITDA has come in at about $516 million US, which is an increase of 12% QOQ and 24% YOY. Again, much ahead of what the street was working with. Now, remember, higher aluminium prices in the quarter gone by, coupled with higher spreads and higher volumes on a sequential basis, is what aided numbers for Hindalco's subsidiary Novelis this time around. Let's also talk about EBITDA per ton, because that has also seen an increase of about 4% on a sequential basis to come in at $563 per ton versus $544 that the company had reported in the previous quarter. Now, the management has reiterated its EBITDA per ton guidance over the medium term that it will cross $600 per ton, so that is another positive. Meanwhile, remember, they are expected to become cash flow positive by the fourth quarter of this year. Bay Minette is now winding down. It is likely to start operations in the first quarter of FY28. Yes, net debt is a bit of a concern that has risen this time around, because of which net debt to EBITDA now stands at 4.5 times versus 4.1 times at the end of the previous quarter. MK, meanwhile, has maintained its ad stance on the stock with a target price of 1150. They say even after adjusting for the Oswego fire, the net adjusted EBITDA per ton stands at 525, which is still much better than what the street was working with. Favorable scrap spreads provided meaningful tailwind for the earnings in the quarter gone by. Nuvama has also retained its whole stance with a target price of 1108. In fact, they've gone ahead and raised their EBITDA estimates for the next few years. So all in all, very strong set of numbers. Management commentary is positive. The fire incident is largely behind us. Insurance proceeds are likely to be received in the coming quarters, and that is also likely to be a key tailwind for the company going forward.
All right, let's move on and talk about all the brokerage notes that have been trickling in for Biocon. Now, and Biocon's first quarter earnings were weaker than expected, with revenue broadly in line with, but the profitability had missed the street estimates. Now, Ashisha is joining us with the highlights of that and the brokerage verdict on that. Let's take a look at that.
Well, yes, so weak set of numbers is what Biocon has reported for the quarter gone by. We had revenue which rose by 10%, but this was still slightly below what the street was working with margins coming in at 19.5%, largely stable on a year-on-year basis. Now, as far as segment-wise performance is concerned, remember, biosimilar revenue grew 16%, generics revenue reported a growth of 21% on a year-on-year basis, with services revenue reporting a slight bit of decline of about 16%. Let's also talk about the business-wise performance. Biopharma revenue reported a solid uptick, but the management commentary continues to remain positive. Strong biopharma performance was offset by the weakness in services performance that the company reported in the quarter gone by. Growth, meanwhile, the management says is likely to accelerate through FY27, And the outlook, most importantly, for the second half of the year continues to remain very positive. They say focus on commercial execution, manufacturing expansion, and balance sheet optimization is likely to be a key focus area going forward, and continued investment in research and development and AI is what the company is focusing on. So all in all, numbers were in line to weak, but the management commentary is very positive, especially with the second half of this year, which is why the stock is likely to be in focus today.
All right, Ashesha, thank you very much for that one. And with that, it is a wrap on Market Cafe. Thank you very much for joining us. But do stay with us on ET Now as we bring you more.